I'm Richard Saxton at the Western Investment Mining Conference in San Francisco. My guest is Seymour Schulich. He is the chairman of Franco and Euro Nevada mining companies, which combined would be the 26th largest company on the Toronto Stock Exchange 300. A couple of very large companies, primarily in the mining royalty business, and you have a big cash position, so you're probably weathering the storm pretty well.
Thank you. Yes, our cash is an aggregate about $500 million US, and we have a positive cash flow, and we are weathering the storm and are, contrary to a lot of people, quite optimistic about gold.
How optimistic are you, and where do you see the price of gold going from these low levels?
Well, let's drop back a second as to why we're optimistic. We believe that gold is doing its job. If you live in Thailand and you'd invested in gold, you've seen your own currency drop dramatically, approximately 35 to 40%. And if you had invested part of your savings in gold, that has not gone down at all. The same thing is true of the Philippines. The same thing is true of Indonesia and Korea. And if we go back a year ago, I mean, gold has done its job in Mexico, it's done its job in Russia. If you lived in Kuwait and you put some money in gold prior to the invasion, it did its job over there. South Africa is another country. All the Latin American countries right now. As a matter of fact, if you take the world population, I would say gold is doing its job for about 80% of the people in the world. It's a store of value, and it's a better means of saving than holding paper money, which is produced very easily on printing presses.
So it's really in U.S. dollar terms what you're saying, that we've seen a major drop in the price of gold.
Yeah, I think, there's been a drop in the price of gold in U.S. dollars. The consumption this year is up 17% in total. It's up 6% in the last quarter. And our problem has been with the central banks. I think and it's quite an enigma, because most of the central banks are along the commodity, so why it's in their interest to denigrate it is a little hard to understand. I think the World Gold Council will be making an effort to get the story of gold across to the central bankers. I just came from 2 days of meetings with them, and we are allocating a much larger proportion of our budget to liaison with central banks and to try to establish a communality of interest with the central bankers, because we think we're all in the gold boat together, and we don't understand why it's in their interest to basically be driving the price down.
So what are you looking to do? Are you looking to bargain hunt maybe for companies that are going to be strapped for cash at this price level?
Well, the IPO market has been cut off right now for most of the companies. We regard ourselves in many ways as a banker of last resort to the industry. We're looking, like a lot of people, for low-cost, world-class projects. We hope in the next year or two to get involved in 2 additional projects to what we already have on our plate. We have a very good growth profile. We're bringing on stream a mine in northern Nevada, and our royalty stream is continuing to grow as we bring on new properties that we invested in a few years ago. So our outlook is pretty good, irregardless of what's happening in the market, which is, the market's really determined by the marginal share that's traded. I mean, sometimes less than 1/10 of 1% of the shares outstanding will trade, and it determines the price. So there is a bit of a sale going on right now in gold shares and on gold itself. If gold keeps falling, I think you'll see 25 or 30% of the mines in the world shut down, and when you invest in a commodity where it can't be produced by a lot of the players at these prices, that's a very good sign that the commodity is probably selling very near its low.
And over the last 15 years have made a lot of people very wealthy, including yourself. An interesting concept in basically being, as you were saying, the banker to the gold mining industry.
We've basically, through either buying existing royalties or creating royalties through lending money to companies, have created a portfolio of royalties in the business. And many people think our business is more akin to banking than it is to mining, and that has in fact been the case for the last 15 years. And we've come from $2 million originally raised in 1983 to a total market cap in U.S. dollars today of the two companies of $3 billion U.S. So we've had a fair amount of success.
And a lot of that, I mean, is due to yourself in selecting the properties that you want to put in the portfolio and collect royalties on. You've got to be very cautious in that selection.
Well, I'm the banker, but I have a partner that's a mining engineer by the name of Pierre Lassonde, and he's been instrumental in the property selections. And we also have royalties in oil and gas. We have royalties on over 2 million acres of productive oil and gas lands in Canada. And we also have platinum royalties, and but 90% of our business is gold royalties.
Your stock has taken a little bit of a hit, I guess, with the mining industry, but has held up well because of the diversification?
I think we were the last ones to go down, and we've had about 33% taken off our market valuations in the last month or so in concert with the group. Usually the rule of thumb is the last firms to decline are the first ones to rebound, and we hope that'll be the case with us.
Your earnings are going up. I mean, you're continuing to make more money. What would damage that? Would it be just a further decline in the bullion price that stop mines from producing?
We've had a number of new royalties come on stream in the last year. The Meikle mine being the major one, operated by Barrick. We have a 4% net smelter return royalty and a 5% net profit interest there, and that's been the main driver behind the increase in earnings. And there's been two other properties, the Briggs and Rosebud in Nevada, that have come on stream in the last 12 months that are also fueling the earnings increase.
So you're optimistic for both companies, or is Franco and Euro, how do they really differ in their structure?
Franco is more diversified into other materials. Franco is involved in oil and gas royalties and in platinum royalties and other commodities like uranium, copper. It's still 87% of its income is derived from gold, but it has got a diversified feature. Franco is primarily involved in Canada and the U.S. Euro Nevada is primarily involved in the U.S. and Australia, is pure gold, and has a portfolio of 21 gold royalties today that are all in production.
I guess the big question is, with that $500 million in cash, what are you saving it for?
Well, we're saving it for a rainy day, and it's raining out, and our experience in the business from 15 years in merchant banking is after a seminal event like the Bre-X situation, you get your best bargains about 12 to 18 months from that event, and 7 months have gone by, so somewhere between 5 and 10 months from now you can expect us to do one or two things that hopefully are of a size that'll have an impact, positive impact on both our companies.
So it's a buying opportunity for Franco and Euro Nevada?
Bear markets are good for us, no question about it.
Thank you very much for spending the time. Great meeting you.
Thank you for your interest.